ask them so that I get the best value for money. Because the goal is not only to know what questions to ask a financial advisor. I'm putting all of them together, I'm calling them financial advisors. But why those questions matter and what warning, again, is a challenge in the marketplace. So today we're going to look at the most important questions every person should ask before trusting a financial advisor with your financial future. What are these questions that we are going to ask them? And importantly, the first question is always about qualification, professional certification. That's very important. When we go to hospital, how do we know who is the doctor? Is it because somebody's got a white coat? And I think there are many people in hospital with a white coat.
Exactly.
The pharmacists normally tend to have one, and the guy at the lab. Is it because somebody has a stethoscope? I'm sure you can buy a stethoscope somewhere, anywhere. You can write on your door a tag, doctor. Yes. And there's just that many people calling themselves doctors. So how do you tell who is a doctor? And this is where we're saying anybody can call themselves a financial advisor. Yeah. So the question is, what are the professional education qualifications they have? What is the training? What is the competency they have? So it is important. You should be able to seek what training have they got. I mean, it's a basic question. You may not even have to ask the doctor. Sometimes you ask the receptionist, isn't it? And they'll tell you, oh no, this doctor, he's a consultant. He's a gyna. He actually studied in the UK, and you can actually see some license on the wall, and a lot of them have that tendency. They'll put their degree certificate there, something like that. You can ask. It is not offending. Yeah. Don't feel like it is offending to ask that question. When you're buying an item, you ask 1,000 questions. So even here you have reason to ask. So you should seek advisors who continually update. You should know, are they updating? We know the one who has experience, who has been there for a while, they have never conditions, and they understand. They have been there for a while. They understand issues much better, and this would help you to reveal if they have handled a situation similar to yours. You might be a first timer. You want to buy shares for the first time. You want to know whether this stockbroker has been there many before. Have they handled starters like you? You want to invest in a money market fund. You want to know, does this person even understand how it works? So it is important to find out what experience they have, and that becomes important. The third question is, who is their typical client? I've always told people, if you want to buy shares, don't go to an investment bank. Go to a stockbroker, because the stockbroker deals with the retail, you as the individual. The investment bank tends to deal with the bigger corporates. I mean, if you met there with somebody from the corporate, they've come with 100 million. You just come with your 5,000. Now, who are they going to listen to? They will deal with you quickly so that you give space for the other guy. Yeah. So an advisor who works with maybe business owners will be able to deal well with you as a business owner. Why? Because in the business environment, the way the incomes are not regular. They go up, they come down. The one who done with maybe salaried employees, he'll be able to deal with you. He understands the environment. When taxes go up, he understands the implications. So the advisor should understand your life stage and your financial goals. The ones who are dealing with pensioners and retirees must be specialized to understand the issues at that level. When we are retiring, what are the issues? What are the money issues we are dealing with at that age? If you're dealing with somebody in the 50s, they're obviously leaving their employment. If they were in employment, they're setting up to go on their own. They're thinking about their pension. They're thinking of what will I be doing. And maybe they had a medical scheme with their employer, so they'll go and have to set up a medical scheme for themselves. But if you're dealing with a younger family, now that's a different stage in life. Maybe both of them are employees. They need a minder in the house to take care of the children, but they have to have medical care for the children. They must have money for paying school fees. If they had a drop in income, that will affect the quality of life. So that helps you when this person deals with my type of clientele. And that's why, and I'll keep going to medicine. A pediatrician is a pediatrician. They deal with children, and they understand children issues. And it is unlikely that you'll be seeking help for a bone issue, and you go to a pediatrician, unless it's a child. So, and that specialization helps them a lot to be able to understand their space much better. So you want to know whether this person handles you, the type of client you are. That's very, very important question. Now, the other question, and this one gets very, very tricky, is to get to know how they earn. It's a very important question, okay? Because there are different ways of them charging you. Some of them will charge you a fee for the service they are giving you. Some of them, it is commission-based, okay? Some of them is a combination of commission and fees that they're saying. Because many products pay commission. And you need to understand, some people will recommend a product based on how it is going to compensate them. So they are not looking at your interest. They are looking at, I want you to buy this one because they know there's a higher margin. And we see this even with shopkeepers. They have two brands of the same thing. But they want to sell you the one where the margin is bigger for them. So it's a common thing. And I know it's not an easy question, but you need to ask. So you need to be able to know how do they earn their income. So that if you know they are commission-based, you need to be careful. They are not just directing you to where their compensation is going to be much, much, much better for them. So again, I'm saying to you, the investor, you have a right to know those things, okay? Then you also need to know what fees will you be paying. It's important to know what fees. Before you engage, it's always good to know what fees you're paying. You don't want to be stuck in between. Are you going to pay an advisory fee? Is the fee a percentage of your investment? Is it a percentage of the return on investment? Is it per product? Are there hidden costs? Because sometimes, you put in your money, and after you put in your money, you realize there are so many charges. There are so many fees. Then those small fees significantly reduce the long-term investment returns. So when you're getting in, are you charging me a percentage of the money I'm bringing in? Are you charging me a percentage of the money you make for me? Okay? Or how are you charging me here? So it is important for us to be able to know the fees we are paying. And I'm hoping the questions are not confusing. I'm hoping they are easier to understand. And then you will need to ask them, if you ask that they disclose these things in writing, can they be put in writing? And when you see hesitation, now you know there's problems. Because you are asking a question and saying, if I ask you to write it down, can you write it down? Because transparency is the hallmark of professionalism. They should be transparent with you. You're giving us 1 million shillings, okay? This 1 million shillings of yours, we'll charge you 5% for this. We charge you this for this. We charge you this for this, okay? And we invest, and this is how we're going to give you a return. We're going to pay you money after we pay tax to the government. But that can be put in writing. If they're not putting that in writing, question marks, question marks, question marks. So a couple of questions, as you can see. And then you want to understand if you're going to work with me, if you're going to say to develop a plan for me, you need to understand what information do they need from you. Because if they are working without asking you any information, how are they working for you? Can you imagine a doctor treating you without asking you questions? What treatment will you be having? They must ask you the questions. You're good. And I said I keep going to medicine because you go to medicine. And the good doctor will not only ask you the questions, they will send you to the lab. Yes. And if they are not able to handle, they will send you to another expert of the issue. So a good advisor should understand your income and your income cycles. They need to understand your expenses, okay? So they need to understand they need to understand if you have debts and how your debts are working. They need to understand your family obligations. What are the issues? Do you have children? Are you paying school fees? Are you in college? And what goals do you have? What do you want to achieve? Because an advisor recommending products before understanding your situation is actually pushing the product. When you hear somebody says, this is good, this is very good, and they have not understood your circumstances, it is good for who? It's good, but for? Most likely good for them and not good for you. But you want to buy what is good for you. So somebody who's just recommending a product, they don't understand why you want to buy, what's your income, understand if you have debts, what are your family obligations. I think there's going to be a challenge in that area. So it is important for us to understand the question. You want somebody, if somebody is not digging deep to understand your environment, then there's a risk you're actually not going to get the value that you're looking for. So that's an important question. Now, the other question is, it is important for you and your advisor to understand how are you going to measure success? How do we know it has been done? If you brought in a contractor, they can tell you the first week we lay the foundation. Then after that, we do the walling. Then we start doing this. So you can almost have a time frame. In project management, there's something called a Gantt chart. And it says week 1 and 2, this is what we do. Week 3 and 4, this is what we do, like that. So you need to have possible measures of success. You need to agree if there are goals, what are the goals we need to achieve? It must be very, very clear. If it is a retirement readiness, we must be able to see how does this prepare me for retirement? How does it work? If it is education funding, we are looking how much money do we need and how much are we going to have? If it's debt reduction, it could be debt reduction, it could be wealth growth. So when you're measuring success, agree. Is it on the achievement of goals? Is it retirement readiness? Is it education funding? Is it debt reduction? Is it wealth growth? What is it and how do we measure it? And so that becomes important that, yes, we are getting into an investment, but this is what we actually want to achieve. So that's an important question even for you as an investor. The other question is what risk you should expect. Now, when you hear people tell you something is risk-free, be worried. We say run to the hills. Noah's flood is coming and it's going to sweep you away. Because a trustworthy advisor should discuss your potential gains. And a lot of them discuss potential gains. But they should also discuss your potential losses. What's the possibility? And I think I've said before, I've worked with insurance people, and they tell you, yes, this is what you can. But sometimes they forget to tell you, if you don't carry this contract to the end, it isn't going to work for you. It is not going to work for you. They must be able to tell you market volatility. How does the market behave? Yes, we are buying shares and we are making money. What happens when we go to elections and the stock market goes down? Then they need to actually help you understand why does it have that cycle when we are doing elections? The share prices always seem to come down. So then you can understand. It should have time horizons. This is the duration we are working. We review after this time. So if somebody is telling you there's no risk, I think it is important to understand. Iko shida somewhere. So we are looking, they should be able to discuss what your potential gains are, what your potential losses are, how the market is going to behave, and what are the time frames. Whatever investment you're looking into, that is very, very important for you as the investor. Now, the other thing is a question of your relationship and accountability as things go. Because we should be able to agree when are we going to review this plan. You cannot have one plan that works forever because circumstances change, life happens. So there should be periodic reviews and adjustments when circumstances change. We always say at the very minimum, we can review once a year, you see, because at any rate, once a year we get older. We get 1 year older. So that's important. If it's our children, they get 1 year older. But there are many other circumstances that change that we must adjust and review the plan. I mean, if you got another job that pays you better, I think there's a reason to review the plan. If you were single and you got married, I think we need to review the plan. If you didn't have a child and you got a child, if you're working and you retired, can you see there are many circumstances in life. If somebody got unwell, if somebody got into an accident, we need to be able to review the plan. So your advisor must be somebody who says, okay, let's review this after 1 year, or let's review it after 1 year. But they need to, and that's why we need milestones. When we are reviewing, we are saying, this is where we wanted to be. And are we there, or what has slowed us down, or have we gotten there much faster than we thought we were going to be? So that's another important question. So you can actually see, you cannot be a passive investor, that you leave people to do everything for you. You must be involved with you. And the other question is communication. How will you communicate with me? Because is this advisor accessible when you want them? I mean, yes, I have sat with you. You told me how we are going to buy shares, or we're going to buy the government bond, and I see something in the news and I want to find out what happened. Are you available? Or are you always, I'll call you later, please text, and I never even return the calls. What's the communication? We also need to agree whether updates are regular. Am I going to get updates? And see, nowadays there are many financial advisors who actually put you in a communication channel. It could be a newsletter, it could be messaging. And so occasionally you get, and there are those who give you a monthly statement. So on a monthly basis, you can actually see what happens. I've seen some who have gone a step higher. They even form a community of their clientele, and they keep updating you on the things that are happening all the time. And you should also know whether questions are welcome. When I have a question, will they be answered? Is there somebody who is going to answer my questions when they come? So it is important to agree what's the communication. And we do not want to have an advisor where it's a touch and go.
Yeah.
Tomorrow circumstances change, I can't get this person. You told me how to insure my car. When I get an accident, I'm not getting anybody. I have many things I need to find out. You know, on that sticker they give you, they say don't admit liability. And now I actually made a mistake and I hit the guy in front of me. So what am I supposed to do? Tell him I am not the one who hit you? I'm a Christian, I don't want to tell a lie.
Yeah.
So that's why you need to be available for me so that then I know how we process this issue. What's possible. And the good thing is nowadays with technology, most providers are there 24/7. So any hour you call, because you never know what happens at what time. Somebody gets real sick at 3 a.m. We have to take them to hospital. We have a medical scheme, but there's something maybe we don't have a number or something is missing. Somebody must be on the other side ready to help us. So there must be a system where that is going to be. So communication is very, very important. So we want to agree how we're going to communicate. And you also need to agree what happens when I have circumstance changes. When actually things change, what happens? For this investment we are getting into, if I got a job loss, what will happen to me? Yes, we have agreed. I am saving for my child so that we can pay for their college. Yeah. But don't jobs drop? Haven't we seen jobs drop? Was it Kopo not too long ago? And these things are happening all the time. Oh, we see the demolition not too far away from the studio here. Yes, and we see many things happening. We have a promise of El Nino. We don't know what job loss El Nino will take away from us. So what will happen? What happens when I get married? You know, now we have legal issues. Yes, you advised me to do this investment, and I bought even this property. So what happens? What will happen if I get divorced? Because these are the realities of life. If I start a new business, how does that fit in? What will change? When I retire, what does that change? So the advisor should explain how the plan can be adjusted. What he's saying is, whatever investment you get into, you want to get into that adjustment. I have bought my insurance. Okay. Now, I have lost my job. So how do I continue this insurance of mine? What happens? Can I stop paying for a while? If I stop paying for a while, what does that mean? What are the implications of that? So we have, that's another set of questions that we actually need to be able to ask. So you can actually see there are very, very many questions that we need to ask. And as we ask the questions, we always say there are red flags that we must be able to watch. So it is important for us to be cautious. So we need to know what the red flags are. In fact, one of the red flags is when you hear somebody guaranteeing high returns. I said run for the hills. There's something they are not saying. There is no investment, single investment without a component of risk. It may be minimal, but it's always there. People tell me 1,000 times, government bonds are risk-free. And I say, so what happens when there's no republic? What happened in Sudan? What happened in Somalia? Yes, you might have been young or not even born, but Somalia was a republic at one time, and there was no government. So there's always a small component of risk. We need to know what is this risk. So this whole issue, when you hear somebody say high returns, anybody promising you risk-free investments, and I think this is one of the things they used to look Kenyans in. It's a risk-free, don't worry. Even all these people are coming in, okay? Anybody who's pressurizing you to invest and invest now, the opportunity is closing tonight. Anything that's closing tonight, be very worried. That person is somebody that you need to get very worried. You know, anybody who refuses to explain their fees, if they're not going to answer your question on their fees, anybody who avoids discussing the risks in the investment they are talking about, or anybody who is using very complicated language to confuse you. I don't know whether you've ever met people who sell cryptocurrency. Wow, it is so confusing that you can't tell head or tail. No? Good advisors educate. Poor advisors pressure. I think that's important to understand. The good advisor will educate you. The poor one will pressure you. So we have couple of questions. So my reason, I'm hoping you looking at this question and you're saying, did I ask these questions? Or should I be asking next time when and I'm not saying you ask questions and you stop investing. No, that's not the idea.
Yeah.
No, the idea is you want to get the best value for your money. So you have looked at this advisor, you have had a chat for them, they've even told you their qualification, where they come from, who is licensed. And normally they volunteer that information.
Yeah.
If somebody is not volunteering, you can prompt them about that. You know, their experience, and normally they volunteer their experience, and you also want to deal with the experienced person. But again, I must pitch in for the new ones. You know, they still space.
Yeah.
Even when you train doctors in school of medicine, they have to practice. So yes, sometimes you're going to meet the new one. Don't throw them under the bus.
Exactly.
We all started new, whatever we are doing.
Yeah.
Yeah, and you want to know what type of clientele do they handle, so that you see, do I fit in this? And I said, and I used the example of medicine. If you want to take your child, you look for a pediatrician, because that's the one who understands children. So you want to see whether you are the typical client for that advisor. Whatever the advisor, whether it is tax they are handling, whether it is share they are handling, whether it is insurance, all of them. We said, how do they get paid for the service they give you, so that then you understand, is it fees you're paying them, is it negotiable, are they earning on commission, is it a combination? Because the risk, we say it, sometimes they will push us to the one with the better commission, because that benefits them. And we say that's natural. Even the shopkeepers do the same. Okay? And you need to be very clear in that investment. What are all the fees? And as you're asking what are the fees, please also ask, how do they tax? You need to understand the taxation, yes. How will they tax the returns for that investment? Is it easy to get your money when you want? If you decided to quit, what's the process of quitting? It's good to know that you're going to get documentation.
Yeah.
And that's why we are talking about disclosure, that those things can be put in writing. Am I going to get a document for the things you have said? And can I see a draft document? Can I see a sample document? Because those documents are always available. Okay. As we work with the one who's going to develop our plan, we're saying it must be somebody who understands us and our environments, not pushing the product, not telling us this is a product. Somebody who has understood your income, your expenses, your debts, your family obligations, your goals. That's the person that we are going to deal with. And we're saying we need to agree how we measure success. How do we know we are getting where we need to be? Is it the goals we are achieving? Is it that we are going to get ready for retirement? Is it that we're going to have money for educating the child? Is it that we're not going to be in debt? Or are we going to measure how we have grown in wealth? And wealth growth is a very interesting area, because largely people measure wealth growth by looking at what other people are doing. And I must say, we have the master class tonight, and this is one of the topics we are going to discuss. How do you measure your wealth growth? How do you tell you're making progress? Not necessarily looking at your neighbor. You never know. You have had somebody with 65 million shillings in the house. Do you want to measure yourself versus that person? I doubt. I highly doubt. That's the measure we want to use. Okay. Your advisor, we said, they need to talk to you about the risk. What risks should I expect? Okay. And how often are we going to review our plan? How do you communicate with me? How does communication happen? If I have questions, will they be answered? What happens when my circumstances change? If I lost a job, if I set up a new business, when I retire, that's important. And we said, watch out for people giving guaranteed high returns, people promising risk-free investments, people who are pressurizing you to act now. Yes, I'm not creating room for you to postpone things, but I'm saying don't fall under pressure. People who refuse to explain their fees, people who avoid discussing the risks for whatever investment, and people who use very, very complicated language. And we have actually said good advisors will educate you, poor advisors will pressure you. So before you hand over your hard-earned money, ask the questions. And a financial advisor should welcome questions before financial planning, as they are doing financial planning, because whatever investment we are doing, whatever financial planning we are doing, it is built on trust, transparency, and understanding. If you don't understand, how do you commit? If it is not transparent, how do you understand? And you also need to have trust. The best advisor is not necessarily the one promising you the high returns. It is the one who understands your goals, They can explain the risks very clearly. They can discuss costs openly, and they help you make informed decisions. The idea is to help you make informed decisions. So your money represents years of hard work. That money didn't come easy.
Yeah.
You know, you've invested in your education and your time and your toil and everything. So make sure the advice you're getting is going to guide every shilling in a worthy way. So a useful way to engage to engage your person is to discuss with them. You ask the questions and listen to the answers that you're getting, so that you're not going to deal with somebody just selling the product, but you're dealing with somebody who is able to advise you well. But for us to get there, you must build your own financial capability. Even you must then know the questions that you should be able to ask. And this becomes a good area for us, because this is why, and when I answer the question, I'll invite them to come for training, because you need to have the basic training.
Exactly.
When you have the basic training, you can sit across the table.
Good.
Yeah.
And that is how you'll be able to distinguish between genuine advisors and unscrupulous people. Let me look at questions here, and I feel that you've responded to most, you've answered most of them, but it is good to respond to them. Let me begin with Susan here. Says, good morning, Mr. Wahome. You've taught us the right questions to ask, but what if an advisor gives answers that sound impressive yet are full of jargon? How can an ordinary Kenyan distinguish genuine expertise from clever salesmanship?
Thank you, Susan. Thank you for your question. I said red flags. Did I talk about red flags?
Exactly.
Yes. Use of complicated language to confuse the client. Yes. When you see that language to confuse you, that's a red flag.
Okay.
Yeah, maybe you need to talk to another one in that field.
All right.
Yes.
And also, the one David has asked, you've responded again on your point number 12, but it is good to respond to him. Good morning, Mr. Wahome. One thing that stood out for me is the need for regular reviews. If an advisor hasn't contacted me in over a year, should I be concerned, or is it also the client's responsibility to initiate those conversations?
Thank you, David, for asking the question. Thank you for tuning in. I think it is important for us to be involved.
Okay.
We want to appreciate maybe the advisor is also busy. They may not have a proper dialing system. In terms of review, it is you, the investor, who needs the review.
Yeah.
It is the advisor helping you with the review. So the responsibility is not theirs. The responsibility is yours as the investor. So you are the one to make sure it happens. What you need to do is to remind them if they have not reminded you.
Okay.
Yes.
And then Martin on the other end is reversing and asema, you've given us excellent questions to ask a financial advisor, and I like to turn the table. What questions should a good financial advisor be asking me as a client? If they don't ask those questions, should I be worried about the quality of advice I'm receiving?
Yes, I can say yes, you'll be worried about the quality of advice. And I think we talked about a few things that we are looking to achieve. We said the advisor needs to understand your circumstances, your environments. What are the goals you want to achieve?
Yeah.
What is the income you have? What expenses are you paying? Do you have any debts? What are you doing with debts? What are the obligations you're committed with? Okay, so that those are the questions they need to, depending on what we are aiming to achieve. Sometimes they don't have to ask those questions.
Yeah.
You have come to me, okay? You want to buy a government bond. You have 500,000 shillings. Me, what I need to do is to take you through the process.
Yeah.
I might not necessarily have to ask you, where did you get this money? That's not my business, okay? But if you're coming for planning, we are looking at planning first before we pick where to put the money. Then I need to ask quite a number of questions.
All right.
Yeah.
So, Mr. Wahome, as you're concluding also the invitation, but before then, let me look at this one. Thank you for the practical insight, Mr. Wahome. My takeaway today is that many of us focus on the returns and advisor promises instead of asking whether those investments align with our goals. If I've already invested in products I don't fully understand, what questions should I ask during my next meeting to determine whether I'm on the right path or whether changes need to be made?
And what was his good name?
Ruth.
Oh, Ruth. Thank you, Ruth. Thank you for asking the question. I think, Ruth, you're very clear. You're saying, I don't understand. So there's something that you don't understand.
Okay.
That which you don't understand is what you're going to ask.
All right.
So, yes, and don't disrupt your investment, okay? And there are many experts. So even if you don't get the one who sold, I mean, life happens, people move. People change, people travel, people stop doing what they were doing. So you can actually get another expert in that space if you don't get the one who sold the product to you or the one who worked with you. And those things that you don't understand, those are the ones you're going to ask.
Okay.
Make an effort and understand. But we say the bottom line is you must be able to sit at the table.
Yeah.
You need to understand. It will be very difficult for us to buy shares if we completely have no ideas how shares they work.
Exactly.
It's a different thing deciding whether we buy Kenya Airways or Safaricom. That's a different equation. But if I completely have no idea how I make money in shares, it will be very difficult for us to do the investment. You cannot put money in a money market fund if you totally have no idea what a money market fund is all about. Okay, and so that's why the basic obligation for me and you as an investor is first to build our own foundation, whichever way, just to know. And the good thing is the information is freely available. There's a lot of it here. There are many books we can read. There are many programs we can watch. There's a lot of content on YouTube and the internet. But we can also be deliberate. We can get into actual training programs. And we say the best value from a financial expert will require some basic financial knowledge on your side. And that is why I encourage people to build their financial intelligence. How do you build your financial intelligence? Financial education. Because when you have the knowledge, you can easily be able to make decisions easily. When somebody is talking to you, you have an understanding. I mean, imagine you are a farmer. And you want to keep poultry and you have no idea where to start. That's going to be very, very difficult. You need to have some basics. So that's why we invite them to engage with structured financial literacy programs. And we have the reputed wealth creation masterclass. Now we're in season 50, and we started this last week. And tonight we're discussing how you develop your financial plan and how you measure your wealth growth progress, how you measure that. And this is going to be on air this evening at 7 p.m. and we are on Zoom. So people take it from the comfort of their house. It is 2 hours from 7 to 9. And yes, we have a few open slots. And anybody looking out for an open slot, all you need to do is show your interest. And the number to show your interest is 0708 150 137. If you're writing, 0708 150 137. And if you do that, we will give you an opportunity. Just come and have a listen. You might join the others who have taken up this journey of self-discovery, an 11 weeks journey where like-minded people come together, they enjoy, they learn together, they form a network, and we've seen tremendous progress by the people who've done this. So that you will not know everything, but you'll have a foundation. When you have a foundation, you can, like when you're buying land, for example, if you have no idea what happens, you will not even ask for a title deed.
Exactly.
Because you don't even know their title deeds in the land. When somebody is buying, even if you look at the right title deed, you don't know what to check for, so you need to have some basic understanding. You need to know why there's a land board, why there's stamp duty that is payable, how all those transactions. When they talk about things like mutation, which I hear people talk about mutations and title deeds, you'll have a basic idea. This is what you're saying, creating the basics. Once you have the basics right, the investment advisors will actually help you much better because your discussion is going to be more structured and much better.
Good. Thank you so much, Mr. Wahome, for the insights this morning. Looking forward to having you again next week, God willing. Asante sana.
Thank you. Really appreciate. Thank you, our listener. We really appreciate. Thank you for engaging us. Thank you for the question. Now we know the questions that we're asking. Let us go out and invest. Let's give every shilling a chance to be able to grow, and let's come to class so that then we learn the opportunities there are for us.
All right. Okay, and my dear listener, talking about class today, build your financial intelligence. Tap into today's masterclass that will be happening this evening, courtesy Mr. Wahome, 0708 150 137. That is the number. And also, you can use that number to order your copy of Wallet Words, authored by Mr. Wahome. Thank you. Thank you so much, my dear listener. It is exactly at the top of the hour. Up next is news. I'll be back with the final hour. Don't go too far.
You are listening to Radio Omini.